Hello, hello.
Hey,
How are you, Stani? I'm not sure if we're waiting for an extra intro behind the scenes here, so I'm not sure if I'll go on right away.
it's super amazing to be here. And Calvin, our history goes quite into the early days of DeFi. So nice to catch up again.
Yes, it's been many, many years. I think we'll cover a few things, but most importantly, get you a chance to intro yourself for those of you that see a bit of a new name of Avara popping around as well. But we've got Stani, the founder of Aave and now CEO of Avara as well, as an entire group of some of the cool things that is being built across Aave, Lens Protocol, and so on and so forth. So yeah, I would love to let you do a bit of a self intro first.
Yeah. So um, Avara is basically kind of a unit of multiple brands that are working on Web3 and trying to make the internet more people powered. Um, and some of these technologies are related to DeFi, for example, within Aave Labs, we're one of the contributors in the Aave community. More recently, proposing for building a version 4 of the Aave protocol, and Go stablecoin is something that we worked in the past, and obviously the previous work we've done in the Aave ecosystem, and then part of Avara is also Lens, which is a decentralized social network. Basically, anyone can create their profile on a network level, interact with other users, and follow. And any developer can build on this open shared social network. And there is also Family Wallet, which we acquired more recently, an Ethereum wallet that is focusing on great user experience and onboarding more users into the Web3 ecosystem. So the way we see Avara is that we build different decentralized technologies and try to be one of the amongst the many contributors in this new internet that we're all here building. And I've been building in the space for I think past 7, 8 years, and it still feels that there is so much to do at the moment, but we're getting more closer actually seeing some of these technologies and protocols to get more adoption. But the bigger and more wider work is happening in the future. So excited to be here and talk more.
Sorry, I couldn't unmute myself properly. Now I'm good. So sorry about that, guys. Yeah, so Stani, I think we've seen quite a few kind of iterations of seeing the lending protocol kind of iterate, right? Was lucky enough to see the earliest versions of ETH way back when, seeing you guys start to do even just the normal peer-to-peer type of lending model and then eventually move to the pool side. I think everyone's always kind of asking, it seems like from the outside, Aave and Lens are tackling two separate kind of things. But I think from our perspective, we've always seen at Impossible that the magic that happens in lending is giving credit and opportunities for those that don't have assets to collateralize to be able to have access to borrow. And I think that's something that you've always been thinking about from day one and building up a bit of both. Was lucky enough to see in the US, teams like Square have both the Cash App and these more retail-facing side of things, as well as the lending to small businesses with the point of sale kind of card data that they had, credit card data that they had. Wanted to hear a little bit more of why you see these two coexisting and why the Avara umbrella is the best way to be able to showcase these two touch points.
Yeah, I do think that decentralized finance and overall this kind of like a blockchain based financial infrastructure will take a little bit longer time that we might be expecting to get adoption. and mainly because finance is such a fragile environment, and you need to have certain maturity before a technology gets more approval and adoption. But I think what is going to be interesting now, when we started to build Aave, pretty much all decentralized finance was happening on Ethereum. With the virtual machine, you could create programmable applications, financial applications, and extend not just having main kind of like a core functionalities such as like exchanging assets, unlocking capital of your digital asset portfolio and earning yield, but also creating interesting like programmable tools and applications, and in a very permissioned open source environment. And obviously that created a lot of traction of actually seeing waves of innovations that we still have today. So DeFi is still evolving. But also what happened over the years is that layer twos became as a kind of like a way of scaling Ethereum in a way that we have low transaction costs for the users. Now with the rollups, ZK rollups, optimistic rollups, it actually means that you can now transact with small transaction costs and get more users to use some of the interesting innovation that is happening in DeFi or even like non-financial transactions. And then I think the next evolvement is going even further, introducing things and technologies like Validium, where you use Ethereum as a way to prove these transactions, but then you use something else as a data availability layer instead of Ethereum, and creating this modular approach, and you can transact with fractions of a cents, and then you get to the scale of something like payments. So like from Ethereum perspective, like in L1, a lot of the major big protocols have evolved, and major components of decentralized finance, and with rollups, they've democratized that access to these same types of protocols. And that's why, for example, Aave is not only on L1, but you can find it on rollups as well for the users. And the next step is basically going towards how we can actually take stablecoins like Go and transact actually on a scale that is applicable to mainstream with a very fractional cost. And I think that at that point, when we get there, and also we get the user experience to the same level, everything can be converted into a blockchain-based economy, and especially with the matching user experience. So I think all the innovation that is happening on payments and fintech in general will just come together, and the blockchain-based solutions and infrastructure will simply just become a more resilient, better, transparent infrastructure to use on payments and other types of financial transactions. And that moment will come at some point, as I think so.
Yeah, I think on this point of like kind of maturity of DeFi, also I think Go has also had its trials and tribulations, and I think I'm quite proud to see that it's been able to maintain its peg actually now for more than half a year. And I think that's something that there's a huge kind of Lindy effect like milestone, right? To see this ecosystem of users treated as a hard currency. And I'm excited to see even more future folks be able to utilize it within various stuff. I think there's a few other cool things that are popping up across your hackathons as well, with the LG, I never say it right, Let's Go.
I love Go.
LF Go hackathon. So yeah, would love to hear a little bit more on some of the things that you're seeing people use GHO for now that it's become a bit more stable as well.
Yeah, what's exciting about Go is that it really is like the main use case of Go is amongst the actual users of the Aave protocol, because obviously the first facilitator for Go was the ability to actually mint Go against your positions on the Aave protocol, and And that's really fascinating because it creates predictability and certainty for users on their interest rates. So typically when you are minting or you're borrowing stablecoins on the Aave protocol, they're actually, the pricing of that liquidity is based on variable algorithmic rates. And that means that when there is higher demand, these rates to borrow capital is higher. Where there is less demand, the cost of the capital is lower. And what Go does actually is that it's a governance-driven interest rates that is set by the governance, where the governance can delegate that to any kind of like a third party, like for example, a so-called risk contributor that are contributing to the Aave DAO and Aave ecosystem, where they set up the risk parameters of these different assets. So Go effectively has created an opportunity for these users to get predictability. And once they have Go, they can actually use it elsewhere. And now more recently, Go is expanding cross-chain with the help of the Chainlink's Chainlink CCIP technology, which means that the implementations of Go can actually exist on all these supported networks. So the Aave DAO chose actually to get Go into the first into the Arbitrum market, and periodically it will be available in these other networks as well. And this means that then actually obtaining Go and transacting with Go is going to be way more lower, and there is going to be yield opportunities on L2s as well. And that's going to be really good for the users and the empowerment. And the next step is to think about how we get Go into something where you can scale that transactioning and lower the transaction cost, and build kind of like an easy way to integrate Go into more kind of like a traditional payment systems. And I think that part is something where we will see like third-party developers and businesses to come and take the opportunity and integrate Go into more like existing fintech.
I love it. I love it. I think as we see more teams embrace this multi-chain kind of approach to scaling, I think that's something that we've seen a lot of large teams, I think, kind of take this slow and steady route rather than jumping straight in. So I really appreciate that Avara has taken a pretty heavy approach towards expanding aggressively to these new chains and giving more users more places to use it. And I think that naturally also will help with peg stability moving forward, which makes Go an even more hard currency for folks to use in the future. With all these additional support at the same time, I think you guys on the Aave side of things have also, I think, been quite active in trying to push for more security standards and risk parameters to think about major assets like DAI, especially with the inclusion of additional collaterals like Athena's USDC E. I'm not sure if you wanted to add any more kind of points on some of the things that you've seen across all of the growth of various synthetic, stable or flat assets out there.
Yeah, I do think that I do think that one of the biggest benefits of the Aave as a protocol, or like as a market, is that you don't need to create like segregated or siloed assets and markets. So basically, whenever there is a asset that is approved by the Aave DAO and onboarded into the Aave protocol, it means that the users have direct access to that asset either by supplying it or borrowing against it without needing to go to a separate market. So there's like an incredible UX benefits of the model that Aave protocol has, and obviously this means that whenever you add a little bit more riskier asset or a collateral, it changes the whole market profile and the pricing. And currently, there is no way to actually price the liquidity based on the user's whole position based on what the collateral composition is. And Aave V4 proposal has this interesting feature of liquidity premiums. And what that means is that if you supply the most leanest collateral into the Aave protocol, let's say that's going to be ETH, and you're going to borrow USDC, you're going to pay just the base rate effectively. But if you are, let's say, using something else as a collateral that is other side of the risk spectrum and adding risk to the protocol, you're paying the base rate plus a risk premium that is quantified based on your collateral composition of these assets. So what it allows to do is that previously the suppliers of, let's say, USDC or other stable coins, they were getting the same yield across across all these assets, and there wasn't a way to price accordingly based on the risk. So now you can price that risk in, and meaning that additional cost or revenue of this risk is going to these suppliers. So it really makes the Aave market as the most efficient, most optimized market, either if you have the most lean position or your other side of the spectrum, by just repricing based on these risks and risk positions that the users have. So that's basically that's a new tool that is going to allow to onboard more assets into the Aave market that maybe have a little bit more long-tailed risk, but at the same time being able to reprice that risk and get the benefits to the suppliers of the assets that these borrowers are borrowing. And I think that is really fascinating feature. And V4 in general has a lot of other interesting features that are actually helping to mitigate the risks and improve the risk composition and management within the Aave protocol.
Love it. So just to make sure I understand, and also to help clarify to the audience, so the concept of this V4 would include the ability for suppliers of liquidity inside the lending pools to dictate whether their assets could be borrowed against for different types of collateral. Is that the key point here, to outline or parameterize the risks and utilities that people could use to borrow out the USDC, for example, that you supply into the system?
It's more like the Aave DAO can decide that, let's say that if the users are supplying only ETH and borrowing USDC, they can decide on a base rate on that typical curve. But then they can decide that different collaterals can actually have additional premium, and they can decide what is the floor and the ceiling of that premium on that particular asset or asset composition. So what it means is that typically now you only have one rate for USDC. Exactly. And this just basically ensures that depending on the risk that that is added into the protocol based on these positions, they can now be priced accordingly for the borrowing costs. And effectively this creates more revenue for the suppliers, but also more revenue for the Aave DAO as well.
And I think brings a level of security, which obviously is really important across any kind of core DeFi Lego block, especially as we see more and more folks build within the ecosystem. I think parameterizing these risks more carefully and clearly, I think will make it easier for people to build on top. Looping back to the LFGO hackathons, was curious, is there any types of things that you hope to see more within the ecosystem, building on top of various Avara building blocks? Like you mentioned with Lens going over with the announcement to ZK Sync lately as well. Have you seen any particular interesting use cases that might sit on a ZK type of use case for some of the things that you're looking at?
Yeah, I am a big believer on ZK as a scaling technology, mainly because the beauty of these ZK systems are that you can reach EVM compatible circuits, and then you're using mathematics to verify that rollup and the state, and then you can store it on Ethereum. And also because of the ZK compression techniques, you need less data. So the higher TPS, it becomes also more efficient compared to the optimistic rollups. And I do think that optimistic rollups will have to convert into ZK ones down the line, maybe in the next couple of years. But I do think that that scaling also means that you can use not just a ZK rollup, but go one step further and use a Validium. And that means that your cost will go significantly down because you're using a separate data availability layer instead. And that creates those payment application use cases that I personally want to see being built with Go. So that's something that if anyone is looking to build a payment solution, Validium is a really good answer, especially for micropayments where you want to create use cases. Let's say that if you browse your Lens social feed, every scrolling triggers a scroll event, and you pay a little micropayment to the app or to the protocol, is a great example, because we're all used to the more fixed monetization models that the internet has, which is basically subscriptions with a card payment that you either pay monthly or annually. But that doesn't need to be the actual monetization model for the new internet, like for the Web3 internet. Like you can actually redefine quite a lot of how the monetization will work. By using this scaling technology, you can actually get quite high scale with a lower costs, and in applications like, for example, in decentralized social like Lens. And at the same time, I think ZK proofs are amazing for privacy, being able to prove data without revealing what that data is. I think that's going to be like a really big category by itself, what you can build in terms of like social context and also financial context, where you want to prove some additional attestations or prove your identity without revealing it fully to actually get a loan, as an example. So really cool things can be done there.
Yeah, I love it. I think also with seeing more regulatory stuff happening as well, I think the ZK side of things will also have a bit of importance as time goes on there. I'm also curious on your side how you see Avara as I would say, cornerstone of what we see across this space. How do you see kind of navigating more of the regulatory side of things, given that you guys in some way are part of the backbone of this space?
I mean, we're focusing quite a lot on the technology side. So what we do, like we effectively want to be one of the builders amongst many others that are building this new future. And for us, what is obviously important is that technology itself doesn't really live in a vacuum. So it always touches some sort of infrastructures. And I think the decentralized technologies, blockchain-based technologies, they definitely change the way we operate and the way we think about a lot of things, not just finance, but also regarding like data privacy and regarding other types of things. So I do think that some of the regulation needs to be at some point kind of like reviewed and understood how it could be actually applied, or new regulation can be sought after to actually create that innovation space that allows to create innovative and empowering technologies, but at the same time doing it as most safest way. And I do think this applies not just only to things like blockchain or ZK proofs, but also applies to things like AI or any other disruptive technologies that has that powerful element of empowering people, but also kind of like has to have good some sort of governance as well. But overall, I'm really excited what we've as a kind of like a wider Web3 community have been able to build so far. But I do think that a lot of the work and most of the work is still ahead in terms of like adopting more users and empowering more users. So it's going to be definitely like a long path, especially for more of the financial infrastructure to get adoption. And I actually do believe that social will scale faster because these are non-financial transactions, and it has also a big empowerment that can happen for users, and also redistribute the way that we think about incentives online. We're creating a living lot of data in social and in these bigger platforms, but we don't really have much of an ownership over that, or even say how these profits or revenue is distributed amongst the participants of social networks. And I think that's going to change in the future.
Yeah, absolutely. I think, being inside the Aave grants DAO now for, I think, 2.5 years or so, I think we've gotten to see a lot of the cool stuff, like you mentioned, that as a greater space have been built inside the ecosystem. I think it's pretty exciting to see the next wave of these things be built as well, and give more access and ownership to the users that are helping build up these networks and new protocols as well. I think that's one of the things of why we at Impossible work on early stage side of things, and want to thank as well the SCB folks for giving us a huge way to get deeper into the Southeast Asia community as a whole, as well as at an international stage to invite cool folks like Stani, building, from many, many years from that very early DeFi channel that we used to man all the way back when, to seeing you build all these things now inside Avara. I think we've come completely full circle over the last, 6 years almost now, since we first Telegram messages. So it's been an absolute blast to be able to catch up with you here today, Stani. Really looking forward to seeing all the cool stuff that you build moving forward with the greater Avara umbrella.
Thank you so much, Calvin, for having me here, and also nice to do a small quick reunion here after a few years.
The time flies in DeFi. Thanks so much.
Agree. Thank you so much. Bye.